walk into a place, I immediately start to see how all of the various things need to be accounted for, what it must be like for Jason Bourne when he walks into a building. He's assessing threats and the nearest exit and who's carrying a weapon and this and that and the other. I do that with accounting. For different businesses, it can be different. So you walk into a restaurant, they have food, they have their space, they have tables and chairs everywhere and that sort of thing. So no matter where I go, I'm looking at how does it all tick. Looking at all of that stuff doesn't necessarily answer all the questions, but it's an incredibly good conversation starter. It brings me to the point of like, oh, well, how do you handle this? What do you do to generate more sales? How does this asset help you to generate revenue? What are the costs associated with that? How do you track that? Oh, you're not tracking that. Why are you not tracking that? That's really where we come in to help small business owners. Not only the kind of the image that they have of the business that is in their heads, right? Like I kind of look at it like this. Everything that we see in this space right here is a visual of the business. What I do with small business owners is take that and help them see it from a financial lens because there's another picture there, at least on the asset side, right? That tells you what the picture looks like from a financial perspective. Now, on the liability and equity side, that's a little bit different. You dig a little bit deeper to get to those areas to see how everything is structurally. But that's kind of the affliction that I deal with as an accountant is that I see everything in many respects from the accounting side. Even like when I'm on the road and I see business names on the side of a vehicle, right? It's like, hmm, it just things start to rattle around in my head. It matters for a number of reasons, right? And I'll give you just one example, right? I talked about vehicles, right? I've met with small business owners that don't have a vehicle on the book. They bought it personally, but they're using it for the business. They're not deducting anything on their tax returns. They're reaping no benefits at all. They failed to account for it properly or to handle it in the most legally appropriate way is the way I would word it. There's a proper way to handle those things, and we try to guide our small business owners to do those most legally appropriate ways of handling it. I jokingly tell new clients that part of our job is to keep you out of jail, not to get in trouble with the IRS. You got to make sure you have all of your assets on the books, not only so that you can get loans and to manage the full picture of assets. That is the reason that's so important for small business owners is to really to help them to take full advantage of assets and liabilities that they have on the books and to make sure that they're tracking all of that correctly and taking full advantage of any kind of deductions that are related to those assets. In summary, right? That's the way that I would describe that. That X-ray vision, if you will, or that view of the books, especially. That's why I love to meet people in person at their offices or their stores or wherever it may be, because it immediately starts to prompt questions. Because if I start to see mismatches between what I see with my own eyes at a facility, and then I turn to the books and I'm not seeing a similar picture in the financial translation, if you will, then that starts to raise more questions. That's what we gradually start to do. We merge those two. We merge the physical reality with the financial reality in QuickBooks. And we make sure those two things are consistent and they're running parallel with one another. One of the things that we work hard to do is to make sure that reality, the picture of the business that you may have physically, matches up financially. A good example of this was a salon owner that came to us a while back. Actually, it was by way of referral. He was trying to actually get a loan to purchase the building that his store was located, that he occupied. He was having difficulties getting the loan because his books were a mess. It didn't take much to figure out just through a simple review of his balance sheet that there were balances that were completely wrong, like amounts that should have been positive that were negative, just as an example. That's kind of trying to avoid the accounting jargon with debits and credits there. But when you run a balance sheet in QuickBooks, basically there are not very many numbers on that balance sheet that should be negative. There are some exceptions to the rule. Depreciation is one. one example, but they should all be showing as positives. And when we reviewed it, there were lots of negatives. That was what we started to hone in on. We knew that couldn't possibly be right. And as we did more and more interviews with the owner, we started to get a more and more clear picture of what that looked like. Eventually, what happens is we come together where the physical reality of that business, the physical picture of that business meets the financial picture of that business. Eventually, they were able to get the loan because they finally had clean, clear financials that were not only reporting on the health of the business and the balance sheet, but also showed the performance of the business on the income statement and the cash flow statement. To make it a long story short, we were able to properly communicate the health and performance of the business to the lender. Most of the time, what happens is small business owners are unprepared for that eventuality of getting a loan. They discount the importance of the financial statements until they need the financial statements. Then it's too late, or they have the potential of missing out on an opportunity because they're not prepared for it. That is one of the biggest things that we do. We try to educate small business owners so that they can understand the importance of financial information when it comes to things like getting a loan. Another one that they don't think about very often, and this is really sort of a pet peeve of mine. I see it happen way more than I'd like, and that is businesses that have been in business for years and they want to retire and not do the business anymore. Great, good for you. You've built up this asset over the years, but they just close the doors. To me, that's a terrible tragedy because if they've been doing the books the right way all along, they've been creating an asset that can be turned around and sold to somebody else or passed down to a family member or something like that. But instead, way too many small business owners just shut the doors when they want to stop working in the business. Another example is going to be taking on a partner. If you were to ever want to take on a partner for a business, believe me when I tell you, they are going to want to look at the books. And if you don't have them ready, you could miss out on the opportunity of those partners. There are so many reasons to have up-to-date financial statements. That is the message that we want to communicate to the world through this podcast, our social media posts, and our one-on-one conversations with clients. Just the tremendous value in what your business is already doing anyway with financial information. It's just a matter of compiling and taking the time to view what's going on. One thing that we experience quite often is a fear of revealing that information, right? They may be a little embarrassed. The books are a wreck and they don't want someone else to see how bad it may be. One of the things that I like to tell people is that we specialize in messes. It is okay to have messy books. If there was a professional doing the books all along, hopefully you wouldn't have that problem anyway. You can almost view us as the financial doctor, if you will, right? There may be certain things that you're not going to want to reveal to the public at large. That's why there are HIPAA laws in the first place, right? Your information is safe with the doctor. Well, your information is also safe with us. You're never going to be able to move the needle if you don't share that information with somebody that can take it. First of all, make it accurate or help you to interpret it so that you can see where you are. Then thirdly, take that information and help you set goals with it. You can maybe get that loan or scale to hire a new person or do any number of other things with the business. It reminds me of another client that we have. He routinely borrows with these high interest borrowers or lenders rather. It breaks my heart because I see the amount of interest being paid that would otherwise be profit in his pocket. And one of the things that we have really worked hard to communicate with this particular client is let's prep your balance sheet in such a way that we can go to a more traditional lender that can give you lower interest rates. Then, yes, you're still going to be paying interest, but at a much less expensive rate. And you will see a lot more profits flowing through the business as a result. There were not too many things about my golf business career that I really didn't enjoy, but one of the biggest frustrations that I would have was walking out onto the driving range tee box with the client, working with them for between a half hour and an hour on their swing, and then seeing them in a week and go, how was your practice? Are you hitting the ball better than the last time we got together? And they're like, I haven't hit a single ball since our lesson. And that would be terribly frustrating for me because we spent an hour. You paid me good money. I am hoping I'm not here just for good, nice conversation, but I'm here to help you improve your golf game. And I feel like I experience the very same thing with many of my clients is that we try to lead them to water, but they don't drink it. That's an unfortunate thing, and it is what it is. But that's just one of the few tragedies that we deal with. I call it tragic because if they were really working the business and really cared about its profitability, they'd start to take a more long range view of it and start to heed the advice of the professionals that they've hired to help them. One of the things that we really take pride in is really communicating with our clients and making sure that they can reach us quickly and efficiently. Another thing that a lot of folks miss with respect to the services that we render is we do so much more than bookkeeping. Sure, that's the core part of what we do. We keep the books in order and we make sure that they can be relied on by tax professionals preparing a return or even the lender that you might be trying to get a loan from. But we are digging into those numbers for the purpose of helping them become more profitable. I experienced that when I first started. When I was small and I was the one man shop, I was sitting there going, "Man, I am working a whole lot of hours. Why am I not as profitable as I think I am?" And that may seem like a silly question or a silly thing coming from an accountant, but I got so buried in everything that I was doing trying to serve clients, it took me a little time to figure it out. What the problem was I was doing too much low value work. I was doing all of the bookkeeping tasks. That was when I was like, "Oh, I've got to delegate some of what I'm doing. I've got to hire someone that will do the lower level work so that I can do the more high level work." And that has been a process that I've just continued to work on, try to do different levels of work, more and more valuable work, replicatable work. And it started by looking at those margins and seeing that if I paid someone else to do this, I could be more profitable. And that's exactly what happened. Some time passed, the next move that you make, and this is all sourced by looking at the financial information. The next move was for me to hire someone to do more of what I was doing because that was the only way that I could serve more people was to hire someone to help with the accountant level work and the CFO level work. With those things in mind, I'm looking at the business owner and saying, "Hey, if you do this, you can be more profitable. And if you do that, you can achieve some efficiencies. If you move your payment terms with clients, you can improve your cash flows." In large part, it comes from literally lessons that I had to learn myself. My activities as an auditor was not enough for me to be a good business person. It took experience being in business to be a better business person. When I talk with small business owners, I see so much of that. And it's like, oh my gosh, please let me help you because we can make you more profitable. We can make you, in so many cases, whatever you're paying us, we will, in all likelihood, pay for ourselves because of efficiencies that we find, abilities to make you more profitable, abilities to speed up cash flows. That's what really drives me, really being able to help small business owners with those things. The other part of our business model that I'm extremely proud of is the fact that we only use QuickBooks Online. And the way that I like to communicate that to small business owners is, well, first of all, odds are if you're a small business owner, you're using QuickBooks Online. Sure, there are different platforms out there like Xero, but QuickBooks Online is far and away the biggest, most popular platform that's being used. Now, why do we use only QuickBooks Online? One of my favorite business stories is really about Southwest Airlines. And Southwest Airlines, if you don't know this already, hopefully you'll learn something, but they only fly 737s. And as a result of only flying 737s, they only need to train pilots to fly one type of plane. They only need to train mechanics on how to repair one type of plane. and they only need to buy parts for one type of plane. So there's a tremendous amount of efficiency with Southwest Airlines because they only fly one type of plane. Well, we only fly one type of plane, QuickBooks Online. That's the platform that we use. We will actually turn away work if they are using some other platform because we're not going to learn another platform. That may seem arrogant, but we will leave that work to others because we don't want to get mired in the inefficiencies of learning how to use another platform. It just keeps things a whole lot simpler. And the ability to basically take any set of financial information and put it into QuickBooks Online is so simple. I'll give you one example. We have a not-for-profit client that we onboarded a couple of months ago, and they were using desktop at the time, but the comparison remains the same. We were able to download the information that we needed from the desktop platform and import it directly into QuickBooks Online with minimal work to have accurate and reliable financial information for that not-for-profit. It just keeps things a whole lot simpler and less complicated as a result. So we stick with the QuickBooks Online. So anyway, to summarize some of what we talked about today, I've got that X-ray brain, the Jason Bourne threat assessment type of brain, only it pertains to the accounting, right? So I walk in the door and then all of a sudden everything turns into dollar signs and assets and liabilities and all of those different things. The thing that we do next for our clients most of the time is really getting the crappy books, the messy books, the incorrect, inaccurate, unreliable books, and snapping it back into place where you can actually rely on the information. I correlate it somewhat to looking at Google Maps. Okay. If you look at Google Maps and that little pin is in a place that you know you're not, you know you have a problem. And when clients come to us, 9 times out of 10, their books are in a similar condition. So when we finish the onboarding process, the pin is now exactly where it's supposed to be. So that's the best way that I think that I can describe the importance of having clean, accurate books. The next thing is being able to use those books. If you don't have clean, accurate books like I've just described, you're going to have a difficult time getting loans. You're going to have a difficult time bringing on new partners. You're going to have a difficult time doing everything from making hiring decisions and potentially even selling and advertising. And it's just this ripple effect that flows out throughout the entire business. And a lot of times people don't even realize it's happening. It's really incredibly important to have accurate financial information for the purposes of meeting your business's small business goals. Lastly, we talked a little bit about the Southwest Airlines model. We only use the QuickBooks Online. We use that model for the purposes of efficiency, not only internally, but also for our clients. With all of that said, if you guys have any questions at all with respect to how to use QuickBooks Online, or you have something you would like for me to discuss in a future episode, put it in the notes and we would be happy to address it in a future episode. Thank you so much for watching. I appreciate and respect the fact that you've taken some time out of your day to watch our show and listen to our podcast. Go to our show notes. We've got all of our social media channels there. Please follow us there. I'll just wrap it up by saying thank you for watching the Business on the Run podcast.